Good day. Ira Epstein of Linn and Associates with your metals market wrap-up for a wild trade day on this Thursday, and we are at the 11th of June, 2020, and we're just after 6 p.m. Central Time. So what went on today? Well, you know, when you get the Fed coming out and they make a statement, and they did yesterday, sometimes it has no impact at all, sometimes it does. The market, the Fed comes out, by the way, at 1 o'clock with their FOMC statement. That's their monetary policy. Then the Fed chair comes out at 1:30 approximately Central Time. He'll talk about an hour, and the market reacts to it. And we saw a drop yesterday. Okay. But today what happened is we get that going around the world impact. When that happens, if you think about the times in Asia, when the Fed is talking here, people are sleeping there. They wake up in the morning, and as much as people think traders are up 24 hours a day, they're not. So they react with their markets. Europe picks up on that. They react on theirs, and it comes back to roost in the U.S., and our markets start reacting as well. And the markets broke. Now, they were down quickly, about 500 points or so this morning. To get to the 1,800 point break we had, well, that was the market feeding on itself all the way down. You're getting a bit of a bounce tonight, and you'd expect that. And we'll get to the charts here in a minute. You were down about $3 a barrel in energies today. You pulled the plug on that market. Bonds and notes soared in the futures, which means real yields came crashing down from that 0.9 to a 0.6 in the 10-year. I'm laughing because how fast it happened. And as much as I still like the foreign currencies against the dollar won today partly because people didn't know what to do. So why did gold sell off? Well, gold didn't sell off because there's anything wrong with gold. It's the old scenario. When everything else I have is going hay in a basket, I'm going to sell what's good to hold on to what's bad. Figure that out, but that's how margins work. So what do we have in gold? Well, whether you like it, don't like it, gold is still up $55 for the week. That's not a bad move. When you look at gold, it did give up ground today, so let's take a look at how it finished. It finished $19 higher. That is not that bad. It's giving up $5 tonight, but a $19 gain, that's still a nice gain that the market had. The pattern is one of a lower low and a higher high, so it's not in a trend at this point. It had that up thrust, and it's giving something back on it. Where's the support? I want you to look at the red line. That's the 18-day moving average of closes. I call it the line in the sand. Markets often go to that number to figure out what they want to do next. Where's the support and resistance if it's away from the 18-day average? It's the Bollinger Bands. Now, in the current rally, we didn't even get close to it, so there's room for that if it wants to go up. On the support line, I'm going to look for the market down here into the 1731 area, 1732 for the initial support. And as I said, it's not trending. What else is going on? Momentum is up. So here's how I'm viewing the chart. You have no trend on the swing line. The bias is up since the market's over the 18-day average, and momentum is up. Momentum is not close to being overbought yet. So on pullbacks, this market probably just does some churning, trying to figure out and let the rest of the market figure out what it wants to do tonight and tomorrow. The silver market and industrial metals lost more than the gold market today. And people got scared. They don't know what to make out of what the Fed chair said. He did say the economy, he's not looking for a V-shaped recovery. Interest rates are going to stay low for the next 2 years. He might put a cap on yields. And COVID is a big unknown, and it creates a lot of uncertainty. Add that statement to the breakout of new COVID cases we are seeing in many states in the U.S. Houston is considering another shut-in, ordering all their people to go back to a shut-in. If you leave too early, you create issues. Dr. Fauci's been telling us that. As much in Illinois as our governor, Pritzker, is under fire for everything for this. The simple fact is, He's playing science. He's not caving in to people. But people 2-3 weeks ago that let this loose, and now we're seeing Arizona and these other states. I'm not saying we shouldn't get free. There's a question of the timing. That's all I'm saying. And with these cases, you add that all together and you had the recipe for some hard times today, and you got it. When you look at silver, it's not doing anything bad. Here's what I think. I started mentioning 3-4 days that it's creating a pipe. What do I mean by a pipe? The narrowness of the Bollinger Bands. They come out of this balloon shape, and all of a sudden they start developing these sideways actions. You had one here. I don't think that's bad. I think the market needs to take this consolidation and build from it. The question is it going to build a base or a top? If the economy does better, if the economy doesn't take a complete hit, and remember, we saw Steve Mnuchin, our Treasury Secretary, today say he does not foresee the U.S. economy closing down again the way they did on this first round. They'll have a different plan. Well, maybe the industrial metals stay well bid, but you don't have a trend right now. Copper market, you lost the embedded reading. What do I teach here? I teach that when you lose the embedded reading, let's show where you lost it. You lost it on the close of business today. On the reopening, we didn't gain it back. Unless this market gets a dramatic snapback tomorrow at some time, the odds favor now that price and the 18-day average are about to make a run at each other. So what I think the pros are doing is they're coming out of the market here. They won't wait to see is it going to snap back or not. You got up to the Bollinger Band, you lost that reading. I think they'll wait for the market to give them something else. I could be wrong, but that's my guess. In the platinum, you went down to the lower Bollinger Band. That's about all that I look for on this market. Why? You're oversold. Every time you've hit a Bollinger Band, up or down, my theory, my own theory, is that's where if you're short, that's where I think the pros are going to take money off the table. And yes, I do think they'll take money off the table the first time it's hit. Now you'll say, what's taking off money? They'll decide that. Are they going to keep all their shorts on? Are they going to drop stops down dramatically? I can't answer that. Everybody trades different, but that's what I think goes on. In the palladium market, you're creating again one of these pipes. Do you see how narrow these bands are getting? That's what you're doing. So I see the base metals, if you will, now churning away. Palladium, platinum, they're catalytic converters. Yeah, this one's used for that primarily, as we know. Platinum market, well, there is some jewelry use. Dollar index, I'm moving to the September. If you look at the volume during the day, there's more volume now in the September than the June. So it's time to move there. When the market reopens, if you lose the embedded reading, you don't want to do a darn thing. That means the odds might be that you're going to get another rally that could carry to the 18-day average of closes, if it stays lost. I don't know, but whenever I see something like that as an analyst, I step back in the market and I go, uh-oh, been in a downtrend, probably a good time to keep your hands in your pocket. And if you are short, might be time to lift some of those shorts. Don't get bullish. That's not what it's saying. But you could get a heck of a spark in the market. You know, one of the things that we do at Linn, and this is a great night if you get our market research, we're going to cover all that's going on. We're going to talk to you about how it's going to handle in the metal markets. We're going to talk about the financial markets, what it means for interest rates. We're going to talk about the grains, the impact of all this might have, the soft commodities, energy especially, we'll be writing on. So if you haven't seen what we do and you're a futures trader, information, well, it's another tool. How do you get it? Simply go to our website at www.iraepstein.com. Under the word, and you'll see it, free offers on the bottom right of the page. Click on that and away you go. If that's difficult and you're watching me on YouTube, simply click right here. It'll take you to that page and you're in business. I'm Ira. Thanks for watching, and I'll see you tomorrow.